In this video, we're going to look through the latest news. We're going to get a bit of a sentiment outline on how people are looking at the crypto market and the stock market. Let's run the numbers. In the latest news in the Wall Street Journal, Americans are really bullish on stocks. Surprise, surprise, as we enter the most volatile month inside the stock market. What's making news headlines? In fact, household allocations to stocks as a share of their financial assets is currently 42.2%. And we can see that net bullish bets amongst asset managers is increasing. What's the headline coming out of this analysis? We are bullish, and to our clients we say now is an opportune time to invest. The main economic event for the markets is likely to be the Friday jobs report. It's the last big indicator of labour market health before the mid-September Federal Reserve meeting, and the Fed is going to start cutting rates at that meeting. You can also expect a lot of volatility inside Thursday's session as the ADP job report comes out and weekly jobless claims. Also, the service sector PMI. But the big one is definitely on Friday when NFP comes out, or non-farm payrolls. After the Labor Day weekend, the stock market generally improves. Unfortunately, sometimes we get pretty big drawdowns, so there could be volatility. But when considering the S&P 500, it rose 70% of the time, and the Dow Industrials rose 72% of the time. Let's head across to Reuters. And the latest market news, Rolls-Royce shares recover after a Cathay Pacific inspection. We've got a bit of a different sentiment here. Stocks on tiptoes ahead of US payrolls. And the dollar creeps higher. If we're looking at sentiment from Reuters, we can see it's mainly positive. UK's FTSE 100 edges higher as aerospace and defence stocks bounce back. Indian shares hover near record highs ahead of US economic data. Something interesting in this particular article from Reuters, I'll just highlight it for you. It's just this particular part here. Will the Fed cut rates by 25 basis points or 50 basis points on September the 18th? You might say, well, 50 basis points decrease in the federal funds rate is way better than a 25 basis point decrease. Actually, it's not. If we get a 50 basis point decrease in the federal funds rate, the Fed has messed up the economic system, and professionals will start to sell and sell down hard. Actually, come September the 18th, we want a 25 BPS cut in the federal funds rate. What is the probability of a 25 basis point decrease in the federal funds rate? It's currently 69%. That's just come down a little bit. And what is the probability of a 50 basis point decrease? It's currently 31%, and that's come up just slightly. Friday's economic data will be really important, and we don't see any stress or indications that would necessitate a 50 basis point cut. That's good, and that's from JP Morgan Asset Management in Singapore. We have an incredible global family. We're all dedicated to being the best that we can be. You'll find that from time to time, you will get setbacks in life. This is just the nature of life. There's nothing that we can do about it. When we have these setbacks, it's important to understand that you will strike support. It can get really dark sometimes, but the sun will always come out again, and you will have your next life rally. If you're going through a life pullback at the moment, please know that our love and healing thoughts are with you. The sun will come out again, and you have an incredible global family at your side. Let's pop across to Bloomberg and see what mischief they're up to. What is this? Stocks hover around near highs as traders await US data. And this is really quite interesting. This particular article, the Bank of Japan, or the BOJ, will lift rates if outlook is realized. Now, what does this mean? you may have heard of the Japanese carry trade, which is different from the Japanese curry trade. One is yummy, that's the curry one, and the carry one tends to sink global markets, so just be aware. I wouldn't be at all surprised if around the 16th or 17th, the Bank of Japan starts to telegraph that it's going to increase rates. T. Rowe manager who predicted the yen shock sees another one coming. Now this is pretty interesting because literally if the carry trade goes off again, we would expect to see a big increase in the VIX. When the VIX increases, the major market indices such as the Nasdaq, the S&P 500, the Dow and the Russell, and also Bitcoin and the entire crypto market cap will come down. You must be aware of this. There was a big fall in Bitcoin's price and right across the crypto industry. That was because of the carry trade. It unwound. Now, what does this basically mean? And what the heck is the carry trade anyway? Well, it's basically investors just borrow cheap money, obtain cheap money over here, and invest it at higher interest rate over there. But when this gets more expensive, they have to sell this thing here to fund that thing there, and the Forex pairs work against them. As a result, they're forced to liquidate really big time over here in order to pay back what's over there. There you go, carry trade explained. Of course, there's a bit more to it, but that is the basics. So if the Japanese yen starts to go up in value, now how would that occur? And what the heck of increased rates at Bank of Japan? What has that got to do with it? Well, it's got everything to do with it. When government bonds in Japan increase in yield, what that means is people get more money back for the money that they put into them. Therefore, all those people who have borrowed effectively risk-free are now paying back a very, very risky loan. And they leverage that loan. Who can believe it? Popping across to Crypto Briefing, we can see Qatar Financial Center unveils new blueprint for crypto regulation. And when you think about cryptocurrency, it's all about adoption. The stock market has revenue, expenses, profit. Crypto has adoption. And when they have adoption, they get paid for transactions. That can be pretty juicy. You only have to look at Bitcoin and Ethereum to know that is the case. So cryptos do actually have revenue. But it's not like stock market analysis. It's not conventional and it's not traditional. Now, when we look at crypto, we're seeing a little bit of negative news here. 20 hours ago, Bitcoin could dip to 45,000 after rate cuts, Bitfinex. Bitcoin, 21 hours ago, Bitcoin funds see 319 million in outflows as the US economic data strengthens. Wow, that doesn't make any sense at all. Now, what do I mean by that? If economic data is strengthening, this is good. That would mean risk-on activity. Okay, let's have a look at another one. US Bitcoin ETFs shed 277 million over the past week amid market downturn. Now, what would you do if you saw these three headlines? If you're not using the CTKS method, you'd pretty much say, oh my goodness, that's pretty negative. I better get out. And I better get in when the bottom is in. All those negative news headlines didn't do a very good job of predicting that actually price was going to come up. You might remember from yesterday's video, I was saying that there was a positive fresh air gap or a positive fair value gap up around to the $60,000 mark. We just went a little bit under that, and now we're coming down. This is a really interesting article. Bitcoin headed for breakout or breakdown. Analysts weigh in. Now, what is this all about? Market in wait-and-see mode. I want to explain this piece just a little bit more. Whether it's a breakout or a dip will likely depend on the next major piece of news or market shift. For now, the market seems to be in a wait-and-see mode. Well, it's a little bit more complex than that. I'll explain on the charts, because that's where we need to look. That's the actual price. In yesterday's video, we were looking at Bitcoin structural levels. I just put on the numbers here to help you out. I also said above 58,908 was a positive fair value gap where things could get really explosive. We always talk about positive air and negative air. Positive air is where there's a positive fair value gap. Negative air is where there's a negative fair value gap. And those gaps occur all the time, and we know exactly where they are and where they start and where they stop ahead of time. So let's go a little bit forward in time and see how this all played out. You can see that 58,717 was an area of quite intense structural resistance. Often what occurs inside price action is that we'll come up and try to challenge a specific area, and it may need to back off to exhaust the sellers out. Then when we get too many shorts piling in, that's what allows us to break through these levels. Notice this, that as we went up, we had a fairly explosive move to the upside. This is the fair value gap that I was talking about that we identified in yesterday's video. A lot of people would never be able to see that gap because they wait until after it's formed to assess that it was there. I have to say, as a statistician, what good is that? You need to do it beforehand. You need that crystal ball out. Now, one thing I'm going to do is I'm just going to pull these numbers across to the right-hand axis. What is really fascinating, as we read the Wall Street Journal, Bloomberg, and Reuters, what were they saying? The stock market is going to rally. As we read the Bitcoin, crypto news, what were they saying? Everything looks bad. It's going to 45,000. Somebody should have told Bitcoin before it went up to nearly 60. For the levels going forward, please keep your eye on this 58,717. It's been a key area of influence inside the market just recently. That chart I showed you was on a 5-minute interval. Now I've changed it to a 2-hour. You can see how we moved up very, very quickly. But unfortunately, sharp angles tend to reflect or tend to reverse. And this goes from both directions, so please bear that in mind. This is basic institutional stop hunting. What the institutions do is they just hunt for people who are using leverage trading. Keeping your eyes on these levels is incredibly important, and it's really important that you do a deeper dive through the indicator, and you can add it to TradingView. Just go across to CTKSMethod.org and you'll find it inside the service. This is a particularly challenging month. If Bitcoin loses key structural levels, it's going to go down hard, and it's going to take the entire crypto market with it. That is not a reason to panic. That is a reason to prepare. And if you're prepared, you are aware as well. And that's what we must be. All of these structural levels change on a month-by-month basis. So that's something that you also need to be cognizant of. A very difficult thing to come to terms with is that if you want to be profitable, and especially consistently profitable, you can't actually listen to the news and you can't rely on news sources. You literally have to look and observe price as it's moving between structural resistance and structural support levels. That will tell you everything. If you're coming up to a positive fair value gap, it can fill it very, very quickly, and it's also likely to reverse, as I just showed you before. We can see here that when it comes to monthly returns for Bitcoin, we tend to see some pretty negative price action. Not all the time, but more likely than not. If we tend to see positive price action, it's pretty anemic. It's just a little bit. But the negative price action can really get up there. So we're looking at an on average 4.4% or 4.39% decline for September. This is not something to worry about. A lot of people say, oh, I really want to get into something. and they forgot the ... part on the end. I really want to get up into something. If it's going up, if it's coming down, oh God, I wouldn't touch it. Oh yeah, no way. I only want to buy on green. And if it goes down, I'm going to sell that. And when it goes up again, I'm going to buy that. And then I'm going to sell that. You can see the major reason why people aren't consistently profitable is they're doing the wrong operation. They're actually buying when it's green and selling when it's red. If you want to be consistently profitable, you must borsog. Now, what the heck is borsog? Our community coined the term borsog from a particular rule 621, and congratulations to everybody who got that right in the comments. You're awesome. 621 says that you buy on red and you sell on green. A lot of people do the exact opposite. When it's going green, they've got no problem with that. That's fantastic. But when it goes red, they sell. Generally around structural support. Boy, oh boy, that's expensive, as it pings back up to structural resistance. And so the dance goes on and on and on. But if you know where the structure is, that's what you need to do. The CTKS method is more than just lines on a chart. It's a complete change in attitude. Before the CTKS method, people just follow the crowd, get into the news and say, where's the news? I want a story based on nothing but an opinion. I don't want any science about it. I just want to see what people are talking about. And most times, those people have literally no clue, and they're not even qualified in finance. The barriers to entry to put out a particular video on anything are pretty low. Instead, after the CTKS method, people have a signal focus. They understand that the structure is all important. They think in terms of 3 dimensions, an up case, a neutral case, and a down case. And they simply observe how price interacts with structure to determine which one is more likely. They know all the charts are intercorrelated and interdependent. They don't get sucked in with buying on green and selling on red. That's amateur hour. What we do is that we buy on red and sell on green, and we go long at spot until there's mastery. Most people only look at the chart that they're putting money into, never even comprehending what's going on with the charts. I'll give you an example what happened in the past 24 hours. But before we get into that, don't worry about bull markets and bear markets, just worry about the borsog market. You can be profitable under any condition, just buying on red, selling on green. Where you buy really matters, and it should be structurally bound. Now, to show you how charts are intercorrelated and interconnected. Keeping in mind rule 448, your chart, whatever you're putting money into, is moved by other charts. It doesn't move by itself. Sacré-Cœur, Ken, what are you talking about? Of course it does. Nobody else talks about this. The key is what happened up here when Bitcoin went through its fair value gap and positive fair value gap, or positive air at that. Why did it stop out here? There is one answer that you really need to keep in mind, the first chart. And just zooming in a little bit, that first chart is actually total crypto market cap. I'm just going to zoom in again. Now I'll pop on the indicator. What you notice from this is 3 very interesting things. We had structural resistance here, and structural resistance here. Let's go back to Bitcoin, and I'm just going to equate these scales. For example, if we put on the structural levels of Bitcoin, you can see there's no structure around here, but there was on total crypto market cap. This structure around the entire crypto market caused people to sell, and thereby weakening risk-on sentiment for Bitcoin. And unfortunately, we had 1, 2, 3 levels, and we didn't get anywhere from that 3rd level. That caused things to get a little bit rocky. We had a strategic fail here, a failure here, and we came back to structural support. And what we're seeing on Bitcoin at the moment, we've come through areas of once structural support, a little bit of structural resistance, but now trying to confirm it as support. and our channel does real-time analysis. We're always looking to the right of the current price. Bitcoin currently is 58,965. Now, what does this mean? Because we're getting above structural support on Bitcoin, that will lend weight to total crypto market cap actually going up. But one thing that you need to bear in mind is this particular level just under 59,180. If we don't confirm a movement above this and then above this particular level, 59,260 and above, if we don't do that, we're likely to see the entire crypto market come down or at least consolidate. Personally, my bias in the next 24 hours is on some negative price movement. Personally, I'm preparing for around 57,000. I also suggest that you keep your eye on the DXY, and there's usually an inverted relationship between Bitcoin and the DXY. Not always, and it's by no means perfect as well. It's just directionally correlated. Now, what does this basically mean? If the DXY starts to come up and starts to rally, we would expect that Bitcoin and the entire crypto market starts to get hit. Just bear that in mind. It doesn't mean in real time we're going to see it. Sometimes we have divergences and lag effects. But it's just a way for us to stack probabilities. I wanted to let you know that the structural levels for ETH/USD have been released, and when we can see structurally that we're starting to lose structure and we have a negative fair value gap below us, that means the price could move very, very quickly down. This is a 5-minute chart. Also, the structural levels on gold have also been released. If you don't know where the structure is, when price comes down, you don't know where it can turn around, and you also don't know where it can hit structural selling and therefore back off. Without structure, you'll find that you are literally blind inside the markets. Very unpleasant. And you also need to know where the fair value gaps exist from the positive side and also the negative side. When you get used to reading CTKS structure, you'll understand that when you have a large degree of structural support below, it acts as a safety net and typically repels price upwards. If you know where the positive fair value gaps are and the negative fair value gaps are, you're really ahead of the game. And the BNB structural indicator has been released as well. The structural indicator on Solana has also been released. Solana is currently 133.62. We saw that this particular area, just a little around that 131.80, was pretty important, and we had a positive fair value gap up to just north of 137. There's also a structural level around that 138. So you saw at 138 and 137, remember what total crypto market cap was doing. It's so fascinating to see all the different structural levels of all the different charts. This means if you were trading Solana, you totally need to understand the structural levels on total crypto market cap as well as Bitcoin. If you don't understand this, you're literally guessing. Now, what is Solana doing at the current time? It's doing something that we don't want to see actually occur. It's starting to form a test pattern to try to push price down. If Bitcoin doesn't hold its structural levels of support, we would expect Solana at least to come back to 131.80 or lower. You literally, in the crypto market, if you're looking at a project, and let's just say that project is Solana, you need to look at Solana's price action, but then you need to look at Bitcoin and total crypto market cap. What I personally do, I look at Bitcoin in combination with total crypto market cap and then look at what the specific charts are I'm interested in putting money in as far as the alts go. If you just look at the specific chart, of course you've got a concept and idea, but it's not really going to help you because you need to look at 3 charts simultaneously. But Ken, that's too much hard work. Well, making money is hard work, but it's a damn sight easier than not knowing why things are going on, the way that they are going on. And when you get negative price momentum inside a market, you must know where the negative fair value gaps are so you can take advantage of them. I'm going to be reaching out to one lucky individual who will gain the Joe D. CTKS Partial Masterclass Scholarship. There is still a little bit of time left. If you're really keen on understanding how financial markets work from an institutional perspective, you'll find the scholarship very, very helpful. Please contact me by direct message on X/Twitter. The details are in the description of this video, or you can just email me at ctksmethod@gmail.com. And thank you again, Joe. Unfortunately, it takes so many years to learn Rule 448 that your chart isn't independent. It's not ever been independent. It is actually, the price is moved by other charts, and those other charts are numerous. The greatest impact on chart movements comes from the Tier 1 charts, such as the S&P 500, the NASDAQ, the VIX, the DXY, Bitcoin, gold, US oil, junk bonds, the US 10, and total crypto market cap. These are literally the charts that are the engine of financial markets globally. Just to let the service members know, the currently released charts for this month: DXY, Bitcoin, gold, total crypto market cap, Ethereum, and Solana. If you're inside the service, how you know if a particular indicator is the correct month, and we're in September, you'll see SEP after the particular indicator. So for example, when we're looking at Solana, the September indicator is that one. A lot of the other ones haven't been brought out yet, but you can see Ethereum USD September. That's how you actually make sure that you're looking at the right one. Sometimes TradingView gives you the capability to just press a sort of a circular purple refresh button, but sometimes it doesn't work. So you'll just need to remove the indicator and just add it back in. The key is that September part right in the heading. When trading and investing, it's very important to have inner peace and outer peace. If you don't have those things, whatever gains you make will feel pretty much worthless. Also, we need to be constantly learning each and every day. That requires both humility and also patience. To trade and invest means that things will not always go your way. Respecting the markets and forgiving yourself when things don't go your way is really important to do. Instead of focusing on the money, focus on having the right process. Focus on gratitude and happiness. The more skills that you have, the more persistent and committed you are, the more success that you will invariably have. Please let me know in the comments if you understand the concept of positive excellence. If you've been with the community a while, how do you find positive excellence, and would you like me to talk about it a little bit more? Life pullbacks will give you the strength for the next life rally. Always make sure that you are dedicated and committed. You'll either win or learn. And if you don't blame, you will learn the lesson. And that's really important inside financial markets. Why is that the case? Because if you learn, you're going to pay a lower cost than if you blame. If you blame, you'll just get the lesson again and again and again until you're paying attention to it. That's not an easy thing to tolerate, but it is true. It's very important to keep positive inside these markets and just know that opportunities in life reset daily. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.